Hey everyone, it is Evan here from the Trade Risk on Tuesday, April 30th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So kicking things off with our dashboard here, you can see today's numbers for the major indices are coming in mixed. Dow and S&P 500 hanging on to positive territory, Russell 2000 and the Qs closing in the red today. And on the 5-day change numbers, you can see things are mixed as well. The Dow Jones and the Qs in negative territory, while the Russell and the S&P 500 sit positive. All in all, though, we are still above all of the key simple moving averages across all the major indices. So life looks pretty good here. Trends remain intact for the bull thesis. Now, if we scroll down and look at some of the sector analysis, notice we do still have a little bit of a split divergence here, where for a long time we've been just seeing a really kind of positive skew from really zero all the way up to nicely positive territory in some of the sector analysis. And now you can see we're actually seeing a little bit more of a split picture here. We have energy, transportation, and semiconductors at the bottom, while we have healthcare, utilities, and financials holding up at the top relative strength. So a little bit of split in the market there. And when we look at some of the major markets, we have the volatility index, VIX, we have natural gas, and we have gold all kind of leading on the upside here. So it's an interesting mix. You kind of have these risk assets down here, or risk sectors of the market, semis, transportation, and energy, followed by industrials, all on the negative side here. And then you have VIX, and then you have gold, and then followed by that you have TLT firming up on the 5-day performance. On the downside, we have emerging markets, we have China, and we have oil all underperforming to the downside. So let's jump into the charts here. Let's take a look at what's going on. Remember, last week was the big week for the markets because we got to ring the bell basically saying S&P 500 finally achieving new all-time highs, NASDAQ Composite also achieving new all-time highs, and sort of the takeaway from our weekend video last Friday was, let's see if there is price acceptance at these levels. Let's see if price can actually hang up here near highs, or is this just a quick bell ring before the market pulls back and we fall back into this range? As of right now, it is still yet to be determined. This is about as close or narrow of a range and no movement as we could expect. Of course, it is only Tuesday. This is a weekly chart of the S&P 500. So this week's trading so far has been very, very quiet, and it's just kind of hanging out right at this all-time high area. And we're still waiting to see if we can get some follow through, some continuation at new highs, price acceptance, or if we're going to get some type of pullback, rejection, or failure to hold these prices. That's sort of the takeaway. That's what we're looking at right now. And when we look at the momentum oscillator at the top pane of my chart, it is still inching higher here. So that is constructive. We have momentum that continues to inch up to new highs along with price. That is a constructive sign. Otherwise, 29.41, that's the area that I'm paying attention to. Those are the prior all-time highs in the S&P 500. Below that, all the way down at 28.72, that's the next relevant support level that I'm looking at on the bigger picture. And how we close this week, whether we can stay green, hold the highs, hold new all-time highs, that's going to be sort of what I'm looking at here for some short-term gauge of market acceptance. If we go down to the daily chart of the S&P 500, you can basically see, today was had a little bit of volatility, a little bit of range. Remember, the VIX is very, very subdued. We've been trading with a VIX that is at, a lot of the recent days in the 12 territory. Today, it's up around 13.18, but by historical measures here, this is still very, very low. These are back to the mid sort of or early 2018 area levels, not too early, but the mid 2018 levels when we were trading around this 11 handle, 12 handle in the VIX throughout April, throughout May to October. And now we're back at those levels now. Ranges have compressed, although today, again, we did see a little bit of a trade down today intraday, but buyers kind of stepping in and holding us right back near highs. Notice a slight uptick in volume today, so a little bit interesting there. I'm going to go back to the cash market. But basically, when we look at this closer view, it's still this 29.40 2841, that's what I'm paying attention to. Those are the prior all-time highs. 2872, as I mentioned just a minute ago, that's the bigger kind of level that I'd be paying attention to on the downside. If you're shorter term, if you're active, if you're looking really nimble here, we have this little trend line that we've been supported by for the past 5 or 6 trading sessions. So right around today's lows is where that trend line comes in. You could use that if you're really active, basically today's lows as some type of gauge of short-term direction. So as it stands, S&P 500 still holding up. Bulls remain in control. We're waiting for more signs here. You can look momentum oscillator on the daily chart. It's very, very flat here, but still very much in firmly positive territory. So it's tough to get too pessimistic here given what we're seeing, but we should not be complacent. As always, remember, risk happens fast, and if we start to break down here, if you do start to see a volatility expansion at a significant spot like prior all-time highs, that is a warning sign. That is something we should pay attention to. It's not here now. It doesn't have to be here, but it's something we want to be aware of. So that is the S&P 500. The IWM here is still the most interesting to me. This is still the market. This is small cap index here, denoted by the IWM ETF, which tracks the Russell 2000. And you can see here, this is still well off of its prior all-time highs. This has been sort of the, lagging market as of recently. It has had a strong 2019, make no mistake about it. But for the past 3 months, it hasn't gone anywhere. It still is grappling with this 160 resistance. That does not mean we have to get super bearish here, but it does mean that we should be watching to see what kind of reaction takes place here at this 160 level. Notice the range expansion today, briefly intraday, coming all the way down to 157. Bulls picked it back up. But notice we've had a couple of little flares here, little thrusts off of this 159 area. I mean, we had the first one, back at the mid-April. We had this little 3-day stint. We pushed back to highs. Then we had a rather, 2-day kind of quick 2% shakeout here. Then we pushed to highs, and now we're kind of on the pace now for another almost 2% shakeout at today's lows. So it's an interesting sort of dynamic going here, as every time we start to retest that resistance, we get this shakeout, this abrupt kind of move lower. And my take on this is, if this happens maybe one more time, bulls may not be so lucky to step up and support another kind of thrust off here. So I think today's lows is actually a pretty important level to pay attention to. Might actually even look at that as a potential tactical short entry for a trade setup. Not, again, going full bearish here or spelling doomsday for the market, but for a little short-term trade, if we start to take out today's lows, or if we start to really get, again, another thrust off of this resistance, I would probably pay attention there for maybe a more sustained move, even if it's just down to 154. Talking for the really active traders here, that's something that could be an opportunity for us in the coming days or weeks. We'll see how it reacts. Otherwise, if this thing just takes off to the races and starts taking out this resistance, then I certainly would not want to fight that, and I certainly would be interested on the long side if we can start clearing above this multi-month resistance at 159 to 160. So that is the Russell 2000. NASDAQ 100. You can see getting a little bit of a push off of these highs, or pull off of these highs, based on Google's earnings yesterday. I think taking the stock down 8%. It's got a heavy weighting in the NASDAQ, and the rest of technology sort of feels it when something as giant as Google suffers an 8% move to the downside. I think it was 8%. Let me just double check that. Yeah, 7.5% today. But if we look at the Qs, you can see here that it is still trading mostly at all-time highs. Once again, just like the S&P 500, it's had a strong run up. It's made new all-time highs recently. We're looking for price acceptance. I know Apple is actually reporting maybe right now as we speak. Let's see. It's hard to tell. Probably doesn't have earnings just out yet, but maybe towards the end of this video we can catch it. But this is going to be interesting on Apple's earnings. Google just kind of gave us a little thrust off of those highs. If Apple is another sort of disappointment in the eyes of the market, then maybe you have that that recipe for kind of a pull off of these recently made new all-time highs. we'll have to see. As of right now, trends are still holding up. Momentum is still quite strong. So that is the major market. I think those are all the takeaways that I really had. Let me just double check here. Yeah, that looks pretty good. So let's go to some other major markets. We'll go to TLT next, which you can see here on the week is pretty much flat. It started off on a downtick yesterday on Monday. We rebounded today. Bulls seem to still be holding on to this important 123 retest. We sort of overshot it slightly here last week. We bounced back above it, and I think this is still a critical area to hold. Remember, we talked about our entry in TLT last week, so we do still have a long position here in TLT. We're looking for higher prices, looking for this support to hold, looking for the retest to hold, and so far, so good. We'll see if that can actually continue. USO is next, and USO here is rebounding here this week, 1.53% to the upside. If you recall last week, that is where we saw the thrust lower. We were down about 6% off of the highs based on Friday's lows. We have now rebounded a bit back, retracing some of that move lower. And so far, we're finding some support around this $13 area. The longer-term trend channel is still up, but there looks to be a little bit of cross currents here. So USO, kind of a battle going on there in the short term. Otherwise, longer-term trends still remain intact. UNG is next, which is natural gas, and you can see here on the week it is slightly lower, but mostly sideways and sitting within last week's range. We finally saw some type of high volume single day reversal last Thursday, the 25th, and we did get follow through to that move, and now we're moving sideways here. So a little bit of life is getting shown out of the bull case here, but remember, this is trading just off of its lows for the year. It's been beaten down. The longer term trends all point lower, so there's plenty of work for buyers to do at this point. But given how bad it was sort of beaten up here, it wouldn't be surprising to even see a move all the way up to, even $24. That's going to be where some of the test and overhead supply starts to kick back in. So 24 to 24.50. That's really the bigger level that I would want to see natural gas reclaim. Until it does, maybe looking more like a dead cat bounce than anything else. But we'll have to see. Every good rally has to start from somewhere. Every good reversal starts somewhere. Maybe this is it for natural gas. We'll keep an eye on it. Last but not least, we have metals. Metals here, GLD, back and hanging out right at this 121 level. So it's very, very interesting here in gold, as we had potentially a pretty significant breakdown last week underneath this multi-month structure, this potential topping pattern, as we, had labeled it. But notice how we very quickly did not really stay down there for that long. We popped right back to the breakdown spot, the scene of the crime, as they say, and we're trading right at it. So right now, this is looking like it could be some type of false breakdown, and maybe this is not time to get overly bearish in GLD. Maybe this was some type of, quick false move there, stop run, if you will, whichever you'd like to label it, and I think we should respect that. So for GLD, if we start clearing above this and getting price acceptance back over 121.50 or so, I think that's something to pay attention to. And I think silver's pretty much in the same boat, $14 even. That's been the big significant technical level to pay attention to. We briefly closed below it only for a day, really, in silver. It had been more resilient, and in our past videos we did talk about the slight sort of optimistic nature that silver wasn't really breaking down as quickly as gold, or at least didn't seem to have those intentions. And you can see now it's right back like a magnet to this $14 area. So let's pay attention, see how it closes, and see which way this ends up pushing off of this level. So that is it. That is the midweek recap for us. Let's take a look one more time at Apple, see if it reported. Don't think so. We're about 15 minutes after hours right now. And I think Apple's probably 30 minutes, posts its numbers 30 minutes after the close. So I don't think we'll get it, but we know what we should be looking for. We'll be watching for which way Apple moves and spills and pulls the Qs. And again, we're looking for that price acceptance, and we'll see how that fares in tomorrow's trading session. So as always, thank you so much, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk, thetraderisk.com/blog. Have a great rest of your day, and we'll see you in the next video update.